Hello and welcome traders from all around the world here at XM Live, where you are watching us on the stream direct on XM Live or on Facebook or on other social networks. My name is Gil Paz, and I have the very special honor today to talk to, in Traders Talk, to Rüdiger Born. Rüdiger Born, wow, first and foremost, we are friends. So this is already very special. The second is Rüdiger has an immense experience in the market. He is in the market since the early 1990s. He's a market commentator on German and Japanese television. He offers trading services to private investors and to institutional clients. And he is traveling also between Germany and Japan. So this is very, very special. Rüdiger, how are you doing?
I'm doing very well. Thanks a lot for these kind words at the beginning. And of course, after you said, yeah, it's for the traders all over the world, it is a must that I'm at a special location currently. And indeed, I'm currently in Tokyo, and I'm really happy being here with you and talking about markets, the trading, and all about earning money at the markets.
That's our aim. You are also, I think, lately quite often in Southeastern Asia, if I'm not mistaken, right? So
yeah, that's true. The world is getting smaller and smaller, and I have quite good connections also to Bangkok, for example, or Thailand, and to other people in Singapore, for example. So I'm not only focused on Japan. Of course, I'm living here and I have quite good relations. You mentioned my TV appearance here in a market TV show here. But it's trading is an international thing, and many people all around the world are interested in how you can improve your trading ideas to trading results. So it is not focused on only one location. It is interesting, hopefully, for everyone in the world.
So you will be interested. Many from Southeastern Asia are watching us. The audience here on XM Live is really worldwide. Also, we have Africa, South America, North America, and a very big audience from Southeastern Asia. So this will be interesting for them as well. Rüdiger, I made a short introduction, but tell maybe a little bit about yourself. How does it come that you live also in Germany and also in Japan? And yeah, what can you tell about yourself?
Yeah, indeed, I'm a German guy. I was born in Germany and studied at university, having my first companies about trading. My university subjects were a little bit different, but after a while I realized, no, it's more than just private trading, what I started very early in the 90s. So I decided to have my first companies because I could not join university every day and take care of my position. So I decided, okay, you and you, let's have a company together. And one day I'm going to university, next day I'm trading. And so we can help each other a little bit. But from these very first moments, it grew bigger and bigger. And after, to be honest, random success at the beginning. It is definitely not from knowledge. It was only by chance. We made some profits. We could survive the tough times, but we grew up and learned more. At the very beginning in the 90s, there was not a chance to learn from other people so easy. I can remember a funny story. I was talking to a guy in America about a trading system, a little bit focused on market movements, Elliott wave, something like this, roughly. And of course, he wanted to earn some money and had to pay him. But at that time, I paid more for the telecommunication to him than I paid to him, because it was not possible to have a call around the world on an internet line or in a cheap manner. So these were the starts. And after a while, we came in contact with more and more people. Also from the business, they ask us, could you provide some kind of your ideas, of your knowledge? And so we had some first clients. Also, we had managed accounts at that time, starting early in the 2000s. Because people said, why should I do by myself? If you are sitting next to the machine anyway, you can trade my account as well. So we grow bigger and bigger and had a really, really exciting time learning many things. We were we had to have a really great network all around the world, from the US, of course, Europe, Asia. Currently, unfortunately, not so much Africa. This is something might come in the future, and also for the Southern American countries. So I think it is a really exciting story, which finally led me to Japan, also by chance. I just was checking the Bank of Japan website and saw I can switch between English and Japanese. And I saw these kanjis, these Chinese-like letters. And I said, no, this is awesome. How can they read? And I dig deeper. And finally, I decided, let's have a trip to Japan. And now I'm here.
So when was it? At which year did you became interested into Japan?
Let's say my interest started in the second half of the 2000s. And my first trip was 2010. And from the first time being there, I decided, no, I want to go again. And the periods went shorter and shorter and shorter. So at the beginning, it was half a year. And after a while, I was flying every 3 weeks. But this is not a good idea, of course. So I finally decided, okay, let's have some apartment here as well, and in Germany, of course, as well, so that I can stay longer periods of time. And the good thing is, with fast internet and a PC, you can trade from everywhere in the world. We can have a conversation with a team who is also now working in home office, because trading is a little bit more like a 9-to-5 job. It depends very much which markets you are trading. So some people say, yeah, do I need to watch the market when there's an off time? No, let me do some sports then. Or I have one of my stuff. He has an old father he has to care for. So he could also always enjoy saying, now I have to go to hospital, but later for the evening hours, I'm really happy that I can trade then. So we were trading roughly all around the world at any time. But doing this from at home, it's easier to have some kind of shifts which are fitting to the markets.
So you are actually 1 decade more in the markets. I became interested in the end of the 90s, just when the dot-com bubble began to burst, or maybe 3 months before. And it's a good experience that I had just in the beginning to see how a market burst. But the 90s, they were very exciting. And it's interesting that you mentioned that you started in the beginning, because I think today, I didn't even prepare this, but at this very moment, many, with the Fed cutting interest rates 0.5% in the previous week, many compare this time where we are to 1995, where Alan Greenspan started to cut rates, and see comparisons how stock markets could go there. Do you see some comparisons to the 90s? To what we have now, or do you say it's totally different?
It's both, to be honest. You cannot directly compare that, but there's a saying, history does not copy, it rhymes. So there are many things that you can see. It might become similar than we had before. And unfortunately, many people, they start trading in a certain market environment and say, yeah, I'm here now for 6 months. And all my experience was the bull market. How can it fall? It's not allowed to go down. I never realized this. So such situations happen again and again and again. So it's good if you see. We have sometimes bubbles, and AI is something. For example, I really like AI, and I think AI will be the future.
Yes.
And there's some dangerous parts of it as well. But I think AI will not be taken away anymore. But older guys may remember Qualcomm, for example. They have been the high-flying, compared maybe like NVIDIA. And everybody was saying, yeah, internet will never die again. But Qualcomm never reached the same level. as we had at the older times.
Mm-hmm.
So it might become some kind of a burden of being like Nvidia being a bubble, or creating a bubble there, and never reaching a high level again. This might not apply today. I'm not talking about that they crash tomorrow. I can imagine that they will continue a little bit higher. But we should never forget that even if a technique like internet or in the future AI will survive and will become the new world we are living in, the bubble companies earning a lot of money in a certain time, they may not keep this pace, and they may not keep the level we have seen before, although they are doing quite well. So
Absolutely.
It become the same situation.
I also think AI will be the future. There is no doubt, but we still don't know who will be the winner. We're speculating on winners at the moment, and that creates bubble. And really, I see there a lot of comparison. It was clear in 1999, 2000 that internet will be the future, and it is the future. It's today in everyday's lives. But the companies that we thought will be the winners don't exist today anymore.
Yeah, indeed. All the search engines from that time, most names are not known anymore.
Netscape.
Words changed. Yeah, for example, that's an awesome thing. So I think it's important not to fall in love with a position so much. Always keep in mind that there might be a change in the technique. Another example might be Apple. Apple is a very good example. Everybody was saying, Nokia, they cannot be attacked by any company because they are the kings of the mobile phones. And then some company thought, let's have a screen in front and no keys anymore. And the world completely changed.
Yeah.
And so whatever you're thinking is the hot shit, I'm sorry to say it like this, in nowadays, it might become really old and not really fashionable anymore in the future. So we should keep this in mind. Don't trust forever. Keep in mind to save or secure your positions, maybe stop them or do anything else for securing your money, because there's nothing more reliable than change at the stock exchanges.
Which makes trading very exciting, right? That's
indeed.
It never gets boring. There is new themes, there are new things to learn. I never understood people who said, trading became very boring for me. I never had this. I mean, I feel challenged again and again and again.
Yeah, well, I think we should see some, or we should divide some parts of trading or not. As I become an institutional trader, the single trade is getting more and more boring because it's like an industrial product. It's just we have a signal, just do it, and that's it. So, and I know that a single trade is never a secure win or a loss. I have a probability rate, and I know, okay, the next one has a probability of XY, that this will go into target or will be stopped out. And I'm, to be honest, not super interested in a single trade because I cannot change it anyway. It's not like I have golden hands and can decide this one is going well because I took care exceptionally on this one. No, that's not the case. But as you said, trading or investing in the markets, both, I think, is something. It will never lose the excitement, the feeling, because we should not forget that the economy is a very important thing, and with the stock market is not exactly the economy at a one-on-one relation, but we are at the front line of what is happening in the world, and being part of it, being maybe safe, surfing the waves of the economy and the markets. That's something really exciting. So I think it's a little bit both. The single trade should be boring so that you are not emotionally affected. But on the other side, talking about the markets, thinking, how can we change something, improve? What can we do additionally, maybe? How can we secure extra risks? This is super exciting and something I love until today. So sometimes I think I'm not working at all. I'm just doing my hobby.
I absolutely agree with you. Rüdiger, we have to make already our first break. So it's 40 seconds. There will be a small break. And welcome back again. We are here. We started to talk about trading. Actually, I wanted to start to talk a little bit more about Japan in the beginning, but it became directly, we went into trading. So I would say, let's continue with the theme. And there is a question also from one of the viewers. What big advice do you give us as private traders versus institutional traders?
Yeah, it is tough to say one big advice only, but I think very important is never fall in love with your position. Always think and know that you will have losses. And if you have a loss, you might have a losing streak. Sometimes it's piling up. It's not really often, but sometimes it will pile up. And always invest only so much that you can handle this. Many people are overdoing. They say, yeah, I have a small account. I have to trade a big position so that it count on my account and I can get a lot of money. But I hate it if the house is gone all 5 years. These situations are not really often, but take care. Don't overdo trading and never think, now I understand what the market is doing. I think a really important thing is to understand that we traders, we are not fortune tellers. We don't have a crystal ball to see the future. I don't know the future as well as you are. Maybe Gil and I, with the experience, we have a slight and literally a slight advantage in seeing the future, because from experience we know this is a little bit more typical. This is from experience. But this is only a slight advantage. And the rest, what we do as a trader is, in my eyes at least, is that we arrange everything. Risk reward, for example. Where do we place the stop? How big is the position size? Will we take profit or trail the stop or have a combination of this? This arrangement is this giving us an advantage. It's not so much that we know what is happening. I'm clueless as you are, maybe, but it is like, I know how I have to deal with the market so that I have a slight advantage over all the other players. That's what we traders do. This is what I think you should keep in mind.
I agree. I think often that an unexperienced trader maybe have a chance of 49%, and with the costs of trading, he becomes a loser trader. And we maybe can go to 52, 53%. That's the change that experience make. But it's a big change, but it looks very, very small.
I have a picture for this. If you flip a coin, for example, it is, of course, it's not an exact example for that, but to give you an impression, if you flip a coin, what we do as an experienced trader, we manipulate the coin so that we have, as you said, 51, 52% chance on our side. And there's a second thing, which I said, what we are doing as a trader, we negotiate with the markets the conditions of our trade. So we ask for, but if we win, we want to have $10. And if we lose, we are only giving $9.50. And that's these small advantages to our side, giving us a constant profit. And as you see, I'm not flipping better than any other person as on earth, just by this small amount and the negotiable part what I said before. And if you keep this in mind, you understand that it's never. Some people are asking me, can you give me one good stock for the next weeks or months or year or whatever? And whoever is asking this does not understand what market is or trading is doing and what trading is all about. If you ask me, tell me, for example, 20 stocks, and then let's see after 1 year or 1 day or 10 minutes, depending on the time frame, what they did. on average altogether. That is what trading is. Trading is an average game, to be honest, and not a single trade, focus on single trade. Many people are overdoing, in my eyes, giving a lot of love. Yeah, but if I analyze a little bit more intensive, reading this book, buying this super expert course, internet, online, wherever, then I know what the future is giving because he's an expert. No, that's not the point. Hopefully it gives you the small advantage, but if you're betting too high on one position, it is all gone subsequently. That's what I learned from the market, and I heard extensively.
Are you saying so the solution is within our hands, not the markets and the market makers?
Yes. Many people think that the markets are always manipulated. First, maybe some markets are manipulated. For example, the gold market is in this. Yeah, many people say the gold market is manipulated. So what? I know that the market is moving in a certain manner, so I can go with them. And the other thing is, many people are blaming, the big fishes or the broker. Yeah, he's getting my money. Why should he do that? There's no reason to do so. There's always a good solution. If the most of the private traders, losing money because they don't know what they do. So the broker does not need to work against you. I think this is something many people say, yeah, but I lost money. I had a smart idea. I heard some professionals. It must be a win. Well, it was a loss. So who was the guy frauding me? And this is a misconception, which is killing success on the long run. Because if you understand that this is not the case, that it is more like, how did you set up the trade, for example, position size or whatever, that is giving you the advantage of the market.
We, as traders, nobody knows the future. We are speculating to the future, and nobody knows the future. So we don't know if there is in 5 minutes an earthquake. We don't know what is happening. Even we are really bad also in predicting weather, even though we have so much technology and knowledge. So why should we be better in predicting the markets? It's not a...
No, of course, it's absolutely not possible. And I'm a chart technical guy. So many people are asking me, what is better, having a fundamental analysis or a chart technical analysis? And I'm 100% a chart technical guy, not because the market is or the charts are telling me the future, but the chart is telling me what the market participants currently are doing. Are they in panic? Are they bored a little bit? Are they having a break or whatever? I can see what mood they have, and what kind of mood they are. And then if some kind of data is coming up, for example, the earnings season is just over, but for example, last week we had some information from the Bank of Japan and on Wednesday from the Fed. How will they react on this one? That's the only thing that you can see. You can compare if you have kids, or if you have been a kid. Most of us have been a kid. You know exactly when to ask, can I go to cinema tonight or to the party tonight, and when not. You just come to the room, see into the face of mom and dad. I come back later, because you can read the situation. And that's exactly with the chart. It is not like, maybe they say, yeah, please go. I'm angry for some other reason. But you have a higher chance, a higher probability, because you read the situation when you see what are they doing? How do they react currently on situations, so that you can predict to a higher percentage what they will do most properly in the future. And most probably, as you said, is never 90% or 95%. It is more or less around the middle.
But your comparison with the children and the parents is amazing. I have to use that as well. I will, of course, continue to refer to you, but this is this is really how markets are, and what experience means, to read the parents' faces or the chart. It's unbelievable. This is really cool. I like it. I would like to go back to Japan because the Japanese yen is the third most traded currency in the world after US dollar and euro. It makes a lot of headlines lately, or I would say even in the last couple of years. We had the previous couple of years, we had a huge devaluation of the currency, and now we probably see a trend reversal. What is causing this in general? Now, I'm sorry because you just said I don't care about this. I care about the
No.
markets, but it's interesting to see because it seems like the whole economy, like all the currencies, they're cutting interest rates, and here we have Japan, a totally different animal, do the opposite things. What is going on?
Before I try to answer this, of course, my trading ideas are only based on chart technical situation, but I love to hear what is in the background, what is the reason for something, or might be the reason. So having a better understanding what is going on is always a good thing. So in this case, with the Japanese yen, we had a situation that the Japanese economy did not went very well in the past, and the inflation was really low. There are two situations in Japan. So the Bank of Japan for many years, let's say 13 years or 9 years, I forgot to be, they lowered their interest rate. I think 13 years, they lowered the interest rates to 0 or partly slightly below 0.
Yeah.
So while on the other side, we saw the Fed raised their interest rate to 5% plus or 5.50. So there was a big gap in this interest rate. So what the world could do at that time, they went to the Japanese and saying, hey, can we have some yen? We want to borrow. And we are paying nothing because it's for free. It was a 0 interest rate. And then they changed these yen into US dollar, and they ask, in this case, for example, 3 months T-bills, treasury notes, whatever, which had a coupon of 5% or whatever. And so this interest was risk-free money. You can, not really risk-free, but you could get it from the Japanese. You just need to say, I have something in the background, for example, a stock portfolio or whatever, so that you could, as a collateral, so that you could get some money. And as the market was rising, the stock market was rising. Why did the stock market rose at that time? The American and also the Japanese one. You had a lot of new money, and you could pay for the stocks. So the stocks were gaining, going up. So you had more collateral. You could go back to the Japanese and saying, I would like to have some more. Can I have? And the Japanese said, yeah, no problem. As a trader, it is just a long position in US dollar against Japanese yen, just to make it clear what it is. But for the institutionals, it is just, can I have some yen? I have a lot of collaterals, getting US dollar, buying new stocks. On the other side, having more collaterals, asking for more money. So it was piling up. That was the first part. At the same time, also the Japanese market gained.
Rüdiger, let's move to the second part to after the break, because we are already
Of course.
And welcome back, traders. Here we are. Rüdiger just was explaining us what happened in the last couple of years. We had a devaluation of the currency because interest rates were extremely low. So people borrowed money, sold it, and bought other currencies with it because they had high interest rates. And so you borrow, you pay 0, and you get 5%. As you said, almost risk-free. You have just the currency, but the currency also went in your favor. So it's you made double money. Also devaluation of the yen because you borrowed it, and also because the difference of interest rates. So now it seems things are reverting. So
Absolutely.
right?
Absolutely. The problem was first the situation for the Japanese or the Bank of Japan was that they could raise their interest rate, but slowly, because the situation is not so severe anymore for the economy. It looked better. And also inflation was not a big deal anymore. Consumption went up a little bit. So they thought a little bit of rising interest rate. It's still 0.25 currently, so really, really low. But you could see that they started a new hiking cycle. And on the other side, the Bank of Japan had to strengthen the yen. The Japanese government did not like to see that the yen was so weak, and especially with these fast movements. So they put some money, bought back some yen to give some strength. So now the problem occurred a little bit before. Maybe you have realized that also already in June, the stock market, especially with the Magnificent Seven, for example, Nvidia, did not gain anymore. So this means you don't have new collaterals for buying your new positions. On the other side, as the yen got stronger, so US dollar yen went down a little bit, holding this position got more and more expensive for the margins, for securing your position. So many traders needed to close positions to get liquidity to turn back this operation. And as this is giving more liquidity into selling these positions, the margin, you had to pay more margin. So you had step by step, it is gaining momentum. So that's why we had a really strong movement here, because the positions needed to be closed because volatility went up. Okay, you were selling, volatility was rising, you had still to continue this step. So this was the beginning of the end of this situation. Currently, we still have a positive interest rate difference in this case.
Yes.
So I think the number of short sellers, US dollar yen, is still maybe limited because you have to pay some kind of a swap or interest rate at night because of the interest difference, but it's going down. It's less and less and less, and the Fed also already announced that they will reduce, and the dot plots also indicated that this difference will be reduced in the near future. So I think this good opportunity we had in the past is now over. So now it's really crucial who is giving us new liquidity so that people can still buy stocks. That's really crucial, because we had zero money. We could get money for zero buying stocks, but as this is over, how can we get new money? And so it's quite important that now the Fed is keeping in mind to reduce this interest rate to give liquidity. But if you see the 3-month T-bills currently, they are at 4.66, so they are already below the target range of the Fed, the new target range of the Fed. So the market is indicating, okay, come down, Fed, come
down further, which will create, of course, the reversing of the US dollar Japanese yen even more, right? Because we have a diverting monetary policy. The tendency now, maybe it can, the Bank of Japan always very fascinated me. Maybe because I'm from Switzerland and the Swiss National Bank is very similar to the Bank of Japan. They are a little bit different than all other currencies. They don't have forward guidance. They don't like forward guidance. But things are changing, I feel, a little bit in Bank of Japan. What is the discussion here? Because it seems like there was this tremendous effort to bring inflation into Japan, which they suffered from for a long period of time. But now I don't think that there is a total agreement between the members and between what's going on. What is the discussion in Japan of what's going on now?
Yeah, you mentioned the problem with the inflation. The inflation was really stable over a long time, nearly zero. So I can remember paying the same amount of money for many, many years in the shops and the restaurants or in the supermarkets, convenience stores. So there was not a big change. The biggest change was the VAT tax we had here. Consumption tax was raised a little bit from 8 to 10% many years ago. That was the point. But now it changes a little bit because the wages are going up a little bit. It's not really high, but before that, the wages were really stable. So there was not a chance that this is changing. But now we have two effects. First effect is that we have many, many tourists in Japan. And so they are also giving new consumption rising the consumption. So there's a chance of a price hike there from that part. Japan is a little bit more openly accepting tourists here. It's still a little bit difficult because of the language, because not so many people are speaking English here. But it's getting slowly better and better, at least having English menu or things like this. So tourists are coming. And on the other side, that the wages are going up step by step. So they see a chance that we have a target inflation also here in Japan of 2%. So a long-term inflation of 2% per year. And this is coming now, or seems to become true now. And this is giving the Bank of Japan and the Ministry of Finance the chance, okay, let's do something here and start rising again. Because they see they need to. Otherwise, with this difference of interest rates, they would kill the yen because it was so much devaluated. Funnily, for the Japanese companies, it was a nice thing because Japan is an export country.
Yeah.
And so when they repatriated the yen, they got a lot of yen for the US dollar in this case. So that was one reason why the Nikkei went up so strongly, because it was valuated in Japanese yen. And you could see we had a setback there as well. But we will see whether there's a chance for higher prices or higher levels for the Nikkei. I think there's a good chance that we see subsequently, maybe not at once, but see higher prices there as well, which also might be more interesting for other investors from foreign countries, because most of the price hikes with the Nikkei were killed by the devaluation of the Japanese yen. So many people saying, I don't understand, the market is going up, but I'm not earning money on my account. Because at the same time, the Nikkei went up, your yen position went down. So but this may change now. This chances are quite good that this is changing now.
Do you think, because my main idea, I tell you the truth, is shorting the Nikkei, because really, as you said, I think shorting the yen, there is some danger, but the Nikkei went up mostly because of the devaluation, but now this could reverse. I mean, the Nikkei didn't make a new all-time high since the beginning of since the middle of the 90s, right? And then only recently it made a new all-time highs, and it has to do mostly with the devaluation of the currency. So if the currency is now reverting, this could create a bigger correction also.
Yeah, I completely understand what you're saying. Funnily or awkwardly, the chart is saying another story, because what we see here before the crash we have seen in early August, and the whole situation, it looks a little bit like what we call a flat correction. It's a kind of a sideways correction, which normally is a corrective pattern to the downside. And after that, the market should come up strongly and give us a new all-time high. You can see a similar movement, for example, in the DAX or Dow Jones before and after the Corona crash. It's exactly the same pattern. It looks exactly the same. So from that perspective, I think there's a good chance that the Nikkei, other than the yen, is giving us a good opportunity. I think the yen will gain value more and more now, especially as the change in interest rate also from the US Fed, will at least make the US dollar suffer a little bit, because other countries trying to get back their positions from the high interest rate they had before. So it will not give high value to the US dollar. I think there's a chance of devaluation there. So if you have a higher value with yen and at the same time a lower value at US dollar, it seems to be a strong movement into this direction. I'm not 100% sure with the Nikkei. I'm just waiting for a good entry point. Currently, I'm not super eager to buy, but I'm waiting for an entry situation there.
Very interesting. Now, the next question that is, you said the companies, they profited from the devaluation of the currencies, but you say politicians, they didn't like it. Why not?
They did not. They have not been against this. To be honest, it is not the Bank of Japan who is deciding about the currency. The currency is decided by the currency bosses or managers from the Ministry of Finance.
Okay.
And they said, we are not against the weak yen, but we don't like that the situation is going exponentially. And if you see, the market was, the yen was devaluated like this long time, and sometimes it went like this.
Yes.
And they hated this, because they say, in this situation, it is for our companies really difficult to have any countermeasurements, or also for companies investing in Japan. It is really tough to react on this. If you have a stable movement, even if the yen is weaker, it's okay. But they did not like this fast movement, and they did not intervene so much in the past. In the last 2 years, there were only 2 interventions both lately, and only when the market tried to become exponential. So that's what they always announced, and that what they also did in this situation.
So, okay, I totally understand, because when it goes exponential, it's very hard. It's like with Bitcoin. If you want to do a deal with Bitcoin,
Yes.
How do you hedge yourself against the volatility risks? Like, I make a deal and I deliver in 2 months in Bitcoin. How much Bitcoin should I pay? I don't know where the Bitcoin is in 2 months. It could be half or it could be double. And that's really hard to manage. And therefore, I totally understand that they don't want exponential. But now they're reverting it, which makes it very interesting, because they're actually liking it, that it's get devalued and it's good for the companies and everything. But now it's a real reversal. So
Yeah, I think it is currently it's just an overreaction because of the higher volatility. I think the market, as I was told here, I was talking to some insiders here in the markets, and they told me that the Ministry of Finance and the Bank of Japan were talking to a quite big hedge fund here and saying, take care, we may have some action here, so please take care. But they still kept on selling short the yen, so they were for a more weaker yen in this situation. But then after a while, the Ministry of Finance took action, and the Bank of Japan bought some yen. And this upcoming volatility forced the hedge fund and all subsequent traders to do something. Because as slow volatility is coming up, you have to reevaluate your hedge, your position to take care of. It's getting more and more expensive, so you need money. If you don't have a good printer at home, then you need to sell some positions to have some fresh money to pay for your hedge. But if you sell something, you give more volatility to the market, in this case to the downside of the Nikkei and also other market parts, but mainly that one and the US dollar yen. So it was more like a trap where it is some kind of a squeeze, a short squeeze, if you like, in this case, so that they had to close the positions. And while doing so, they were harming themselves because they introduced a new higher volatility so that they keep on closing. So I think, I don't know the current numbers, but most of the carry trades were closed already. So it's not a big amount anymore. So I think now calming down, the pressure for a lower US dollar yen or higher yen is not very big anymore. So I think this pressure is going down. So we will have a normal market reaction in the following. I'm quite sure. And most of the market participants, as I said, they are not really eager to sell short US dollar yen because they still have to pay interest rate every night.
Yeah.
So you really need a strong movement to have some profits out of this. And why should you try to trade against the interest rate? It's
Absolutely.
just killing performance. So I see a chance that the market is now trying to find a good level to turn around and then doing it in a more sensible way, going upwards.
I understand. Wow, time. We only have 4 minutes left. I would like to give you a personal question, maybe to the end. What do you like about Japan, and how is Japan different to Europe? And maybe here it's a long question. How are Japanese traders different to European traders, maybe also?
So what I like is the food, the people, no crime, no pollution, everything is clean. You can trust everything is going well, everything is well organized. And so this is really convenient in life, really tasty, of course. And the traders, this is a funny story. In the past, at least, it were merely the women trading. The men were earning money at the company, bringing this home, and the women took the money and invested that at the markets. So we had, in older times, let's say 80% traders were women, but this is changing currently. So the Japanese people are also the men are coming to the markets and finding out, okay, I can do this, and it's more convenient with all the PC, smartphones, that you can just with a tablet, if you see a good situation at the market, I open an order there. So I think this is really changing here, and it's a funny story because it was a completely different situation like we had in Europe.
I read actually researchers that's not connected to Japan, but this is very interesting information that you're giving. But I read the research that women are actually better traders than men, because men, it's a lot about ego. They want to be right, and they want to be alpha animal, and they want to show that they are the kings. Whereas women, they're more humble, and they just want to make money. So it's and
that's I can 100% confirm. I had many people in my career that I was teaching my trading style and my ideas how to deal with the markets. And I realized that women are way easier. They are listening a lot more. They say, okay, I have to learn. They accept this. While men say, I understand. Let me just do this. And if they lose money, they get angry and saying, next trade, I get everything back. At least both behaviors are killing money.
Yeah, I agree. How is it about crypto trading and algorithmic trading in Japan? Is this a big thing?
Yeah, crypto is, of course, something people are talking here as well. Crypto, of course, I sometimes, currently not so much often anymore, I went to some Bitcoin meetings or crypto meetings here, and it is, I think it's a rising number of people interested in this as well. algo trading as well. Funnily, I was here involved. I was asked to be part, and for many years, being part of high frequency trading, which is the highest form of algo trading.
Mhm.
But this is so special. You cannot do this at home. It's something you need to have a collocation at the stock exchange to do that. But people from the institutional side, but also from the private side, of course, they see a good chance in having some algos, at least helping them. I would not purely rely on this and saying, okay, let's see next Friday how much money I made. That's something I feel a little bit bad. But if you have an algo helping you for your decision making, to correct you if you're doing wrong or whatever, I think this might be a good idea to have these at least in the background.
Wow, Rüdiger, it was fantastic. Again, the hour went so fast. I think we need to make another session in the future. I also think the viewers liked it a lot. Your perspective to the market is very unique. Thank you so much. It's really an honor that you came. And yeah, I wish you all the best and see you soon.
The pleasure was on my side. Good luck to everyone out listening here, watching us. And thanks to you, Gil, for your time. And it was a pleasure talking to you.
Bye-bye.
Bye-bye.